On Business Incorporated today. African Export-Import Bank and Portugal's National Association of Young Entrepreneurs partner to promote Africa's fashion, apparel and textile manufacturing industry. African Trade Insurance announces the closing of €203 million financing agreement social loans to Ghana. African Development Bank approves a loan of $4.25 million to Lesotho. Hello and welcome to the program. I'm Imi John Mekwa. We'll start right off with intraday markets here in Africa. The Nigerian Exchange Group closed for the Eid al-Kabir holiday. However, Monday's session closed marginally up. South Africa is trading today at intraday. The JSE was doing much better, up 0.43%. Egypt was unchanged at intraday, while Kenya closed Monday's trading session negative, down 0.02%. Markets in the Middle East are closed for the holiday also. However, most of the market closed negative yesterday, except Saudi Arabia, which was up 0.51%. Dubai Index is the least, down 0.01%. Abu Dhabi also down 0.05%, while Qatar lost the most, 0.74%. In Europe, stocks were higher this morning, looking to rebound after global markets retreated on fears of a COVID-19 resurgence. And this is while the threat of Delta variant is still on. Chelsea joins us from Frankfurt to tell us what's happening at the moment. Hello, Chelsea. Good afternoon. Well, European markets seem to be recovering today after starting the week with steep declines. How sustainable does it look, this rebound? How sustainable does it look?
Well, right now, investors are describing this as a very fragile stabilization. We do see most European indices up. The DAX here in Frankfurt is up about 0.2, 0.3%. Similar small gains among most of the other indexes on the continent. But there's still a lot of risks that investors are quite worried about. Most importantly, the Delta variant that is proving quite difficult for countries, even those that have very high vaccination rates to control. So there had been this narrative over the past year that once we got a vaccine, that this would allow for economies to fully reopen and we would see the global economy really back on its feet quite quickly. Now investors are sort of getting a reality check about how complicated and long-term the COVID situation is going to be as well. There are a lot of other risks to the global economic outlook, things like the rise we're seeing in most developed economies in inflation, as well the prospect that central banks will start to pull back some of that stimulus that's really been supporting markets as well. Stocks have really run up a lot over the past several months, so we have very high valuations, a lot of risks, and investors say that really spells more volatility ahead.
And the International Energy Agency says that global emissions could hit an all-time high in 2023, and they blame the government for not spending enough on renewable energy. What's Europe's role in this?
Well, Europe has been one of the leaders in terms of packages, in terms of money and plans for greening its economy. Last week, we actually saw the European Commission present its plan for a Green Deal, and this will hopefully get the EU to net zero in terms of emissions by 2050. They say that they would be the first continent to do that. So they have a lot of really aggressive plans. They want to phase out all diesel vehicles being sold by 2035. They want basically every part of the economy to really pull back their emissions. And the EU also has invested a lot of money into this. The EU has this €800 billion stimulus plan that it's using to help get economies back on their feet in the wake of the pandemic. About 40% of that is going specifically to renewable energy products in member countries. So the EU is putting a lot of money on the table, but we're not seeing that same commitment in every country in the world. Even developed economies like the UK and Japan plan to spend a lot less. They haven't come forward with really aggressive plans for greening their economies. And one thing that this report also noted today was that we're seeing a big division between the wealthier countries and the countries that are less wealthy. So emerging, developing economies have less financial resources. And right now, a lot of those are tied up in COVID stimulus efforts. So things like getting vaccines, making sure that people are getting some sort of help if they've lost their jobs. So what this report showed was that actually only about 20% of the funds that developing and emerging economies need to get to net zero by 2050 have been committed so far. So this is just another example of the huge division we've seen in economies and their ability to respond to COVID, but also the climate crisis in the light of the pandemic.
And let's talk about European travel now. Travel stocks have been getting hit hard in recent days, but today EasyJet says it plans to boost its flight capacity over the summer holiday period. How strong do we expect this travel season to be this year?
Well, there is a lot of hope bound up in the summer travel season. The EU has basically opened their doors to travelers who've been vaccinated from outside the bloc as well. The EU has introduced a vaccination passport that they hope will really speed up and allow for more and more people to travel throughout the bloc. So there is a lot of hope riding on this, but so far there have been basically mixed results. So there are a lot of people traveling from within the EU, but there's still a lot of problems that the airlines are facing, particularly the UK continues to introduce new rules. They've recently introduced new rules on French citizens who want to travel to the UK. So there's still a very complicated and confusing patchwork of rules from different countries around the world about what they require for travel as well. Some of the big transatlantic routes, for example, between the EU and the US, haven't really been fully reopened. The U.S. still has a lot of restrictions in place for visitors. So I'd say that this likely will end up being a bit of a disappointment for a lot of airlines. We are seeing more travel, but certainly not anywhere near a full recovery in the air travel market.
All right. Thank you so much, Chelsea, and enjoy the rest of your day. So we move over to London now, where Juliana is standing by to tell us day 2 of Freedom Day, what's going on. Hello, Juliana. Good afternoon.
Good afternoon, Ine.
So let's start with online grocery sales, which has declined year on year for the first time ever in the 4 weeks to 11th of July. I guess this is one of the downers of the ease of the COVID-19 restrictions.
Yeah, absolutely, Innie. We know that consumer habits have completely changed because of COVID, particularly when it comes to shopping. We know so many shoppers here in the UK were encouraged to buy their groceries online, particularly those who were elderly, vulnerable, or who had underlying issues because of the pandemic. And so we did see a surge in online shopping. Also, as well, there were so many stores that were closed, and it was just more convenient. But now, according to this data, for the first time ever on record, online grocery store sales have fallen 3.1% overall. So even in shops, they've fallen by 5.1%. This has raised some alarms. At the moment, Waitrose is the only grocery store in the UK that is showing some growth. All of the other stores are in negative territory at the moment. This is all down to the pandemic. In April, you could eat outdoors. In May, you could start eating indoors. A lot of people are sick to death of spaghetti bolognese in the kitchen. They want to go out and spend those pounds in restaurants, and that's what's been happening. And of course, the grocery sales are sliding because of that. There is a silver lining in this data. One of them is, of course, the Euro 2020 tournament, which was absolutely huge. The sales of alcohol surged 23%, £1.2 billion. was spent on alcohol during that period. That probably explains some of the violence we saw after the final, and also as well the sale of snacks. The sale of snacks are up 23%, but overall pretty a bad day for supermarkets here in the UK.
Yeah, well, also earlier we saw a rebound of the FTSE 100 from yesterday's slump. How's the market now?
Not great. Lots of those early morning gains are starting to dissipate at intraday. The FTSE All Share is up 0.40%. The FTSE 100, though, the blue chips, it's down 0.31%, and the FTSE 250 is up by 0.63%. In the currencies market, the British pound still down today on the US dollar by 0.39%. Also down on the euro by 0.33% and down on the Japanese yen by 0.47%. I mentioned to Jimazay in the morning, Inni, at the moment it seems the mining companies are the only ones that are lifting up the blue chips. Still a bit of a red day in the markets in the square mile.
Yeah, well, we do hope that with the Freedom Day and easing of some of the restrictions that we'll see more activities and there'll be more sunshine in the markets. Thank you so much, Juliana. Enjoy the rest of your day.
Thank you. Thank you.
So moving on now, shares in Asia Pacific fell today following an overnight tumble for stocks on world market. That's why the Dow Jones Industrial Average plunged more than 700 points. In Japan, the Nikkei 225 slipped 0.96% to close at 27,388.16. Meanwhile, the Topix Index fell 0.96% to end the trading day at 1,888.89. South Korea's Kospi closed 0.35% lower at 3,232.70. Mainland Chinese stocks closed mixed, with the Shanghai Composite fractionally lower at 3,536.79. While the Shenzhen Components advanced 0.12% to 15,011.35. Hong Kong's Hang Seng Index fell about 0.7% as of the final hour of trading. S&P AX 200 in Australia dropped 0.46% to close at 7,252.20. MCSI Broadex Index of Asia Pacific shares outside Japan fell 0.58%. Stock futures jumped in early morning today after concerns about the spread of COVID-19's Delta variant sent investors dumping equities, especially those directly affected by pandemic restrictions. Futures on the Dow Jones Industrial Average were up 263 points. S&P 500 futures and Nasdaq 100 futures both traded higher. Wall Street suffered a sharp sell-off during regular trading hours as investors feared that the fast-spreading Delta coronavirus variant could hinder the economic recovery. The blue chip Dow tumbled more than 700 points to post its worst day since October, while the S&P 500 fell 1.6% and Nasdaq Composite dropped about 1.1%. In the oil market now, prices stabilized today after slumping around 7% in the previous session amid a broader market retreat led by concerns about a resurgence of COVID-19 infections, which came just as producers inked a new supply deal. Brent crude gained 38 cents, which is 0.6% to $69 a barrel. The U.S. crude contract for August delivery, which expires later on Tuesday, was up 49 cents at $66.91 a barrel. U.S. crude for September delivery was up 1% to $66.99 a barrel. The sell-off, which pushed prices to their lowest in 2 months, was largely due to concerns centered on the Delta variant and macro backdrop rather than a significant rethink of forward-looking oil fundamentals. Climbed to the highest in around 2.5 years as the global economy recovers from the COVID-19 pandemic. OPEC Plus agreed new production quotas for other members from May 2022, including UAE, Saudi Arabia, Russia, Kuwait, and Iraq. In the metals market now, gold prices were flat today as a slide in U.S. Treasury yields offset a firmer dollar amid investor concerns over a relentless surge of the Delta variant that could threaten the outlook for global economic recovery. Spot gold was steady at $1,813.15 per ounce, and U.S. gold futures edged up 0.3% at 1,813.80. Benchmark 10-year Treasury yields were pinned near 5-month low. Lower bond yields reduced the opportunity cost of holding non-interest-bearing gold, but making gold more expensive for holders of other currencies. The dollar held a near 3.5-month peak against its rivals. Silver eased 0.1% to $25.18 per ounce. Palladium was steady at $2,597.23, and platinum rose 0.3% to $1,077.98. We'll take a break now. When we come back, we'll head straight to the commodities market updates. To stay with us is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Now, let's talk about maize. It is the second most cultivated crop in Nigeria in terms of area harvested. In 2020, maize production was 10,000 tons, growing at an average annual rate of 7.29%. Yet, production has not yet met the demand in the country. Well, the Nigerian Central Bank has released 50,000 metric tons from the Strategic Grain Reserve to reduce the pressure on domestic price of maize and on forex availability. Also, the price of corn in Nigeria has increased by 33.3%. It's now about 18,000 naira per bag from 13,500 naira last year. Well, to help us understand this scenario, we have Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company, and he shares his thoughts with us on this. Good afternoon, Mr. Rwani. Thank you so much for sharing your holiday with us.
Good afternoon. I'm back at the start.
Same to you too. So would you say that this release of from the Strategic Grain Reserve is a prudent move, given that maize is a critical raw material for producing a lot of things, ethanol, breakfast cereals, and so many things?
Yes, it's a prudent move, but the impact is going to be very limited. Like you opened up and said that actual production of maize in Nigeria is about almost anything between 7 and 10 million tons a year. Now, maize in its context, you have to understand that globally, 60% of maize is used for livestock feed production. 2, livestock feed production. 2, is used for industrial processing, and 3, for human consumption, 10% only for human consumption. In Nigeria, it's the other way around. Over 60% of the maize produced is actually for human consumption. About 20% is used for industrial processing. And then the balance of 20% is used for actually live industrial processing. Now, what you see today is that the maize farmers, Nigeria's production of 10 million tons is broken down into these 3 segments. But also important to note is that it's also being used by smugglers because of their exchange rate sensitive. So part of the maize that we produce goes out of the country. Now, 50,000 tons is nothing compared to 10 million tons. Therefore, the central bank is releasing this, but the central bank also released some money, allowed for the imports by about 6 or 7 major importers to bring down the pressure on the prices. So whilst global prices actually came down, in Nigeria, the price has gone up by 33%. So that is what you must understand, that maize is so critical today, and there's a shifting of the demand from direct consumption to actual industrial processing. That is what you are seeing in Nigeria, and that shift in demand is bringing pressure to be on those substitutes like guinea corn and sorghum.
Okay, so like you mentioned, the global price has declined by about 0.8%, and the U.S. and increased supply in North America. Do you think that this trend of a slight drop will continue? And what do you think will be the implication for Nigeria, especially the corn farmers?
Well, due to the pandemic globally, we saw the demand for maize drop by about 1%, but now it has gone back up. We are actually expecting that the global demand for maize will go by about almost 2 or 3%. What does this mean? It means that the major users of maize today, Brazil, China, and the United States, are having to use this because of what is happening today is that because of global clean energy pressures, people are being asked to use ethanol in addition to petrol to drive cars. So you have electric vehicles, clean energy initiatives. You have ethanol being used, and ethanol is made mainly from molasses, from maize, and from other products. So what you have today is that the global price of maize is going to increase. The global supply of maize will remain about the same. And then you would see that countries like Nigeria that need maize for critical production of livestock feed, for industrial processing, and for direct consumption will have to supplement local production with some imports. And so what does it mean for us? We have to be looking at critically what to do about our local grain production. South Africa, for example, produces 17 million tons, right? Actually, South Africa produces about 17 or 18 million tons a year. And the bulk of it is made from genetically modified seedlings. Nigeria will have to accept to use the natural seedlings and also to use genetically modified seedlings and also to deal with the question of smuggling when the exchange rate is in equilibrium so that people don't smuggle it out. And that way, we'll see that people like Nestle, who use it for golden morn, there are people like livestock feed and Nigerian flour mills who use it to make feed compounding. And then there are those who are using it for making ethanol, the sugar companies and the spirit making companies. So when you put all of this together, you'll find that for the next 2 to 3 years, we're going to be seeing shortages in maize, supplemented by some importation and supplemented by an increase in the genetic composition and changing in the production quotient in Nigeria.
So with this expected hike in price that you mentioned, what can manufacturers do as a hedge, to protect them at this time?
Well, not much. You see, manufacturers, some of them are going into backward integration. We have things like the Anchor Borrowers Program and other supply initiatives. So what can we do? First and foremost, we have IIT, the research institutes coming up with new variants. We have improved seedlings and improved use of fertilizer, right? Then we also have the shift in terms of substitutes so that we can use maize, we can use sorghum, we can even use cassava and all the other things to make ethanol rather than using maize directly for ethanol. So to break it down for the ordinary man, you see today, if you drive along the streets of Lagos, Ibadan, Kano, anywhere, by this time of the year, you see people roasting corn with beer and all of that. You don't see them anymore because the demand for the industrial use has actually eaten into the demand for maize. And therefore, maize for direct consumption will actually drop from around almost 40% of total utilization in Nigeria to about 10%, and we'll have to get used to not eating corn for direct consumption anymore. I think that is what's going to happen.
All right. Thank you so much, Mr. Rwani, for sharing your thoughts with us on the issue with maize in Nigeria, and enjoy the rest of your holiday.
Thank you, and you too.
So we move on now. African Export-Import Bank and Portugal's National Association of Young Entrepreneurs have announced a 3-year partnership to support and promote Africa's fashion, apparel, and textile manufacturing industry in Portugal and across Europe. This partnership is part of AfrinBank's Creative Africa Nexus program, which aims to facilitate investments in Africa's creative and cultural economy through financing, capacity building, export and investment promotion, digital solutions, linkage, partnership promotion, and policy advocacy. Within the framework of this partnership, ANGE, through its fashion project called Portugal Fashion, will provide African designers with showcasing platforms, facilitate their access to international markets, and strengthen their capacities through business mentoring and technical assistance in apparel production. The program is designed to promote at least 40 African designers annually on Portugal Fashion's runways. The African Trade Insurance has announced the closing of two 203 million euro financing agreements, social loans, to fund 4 health and 2 transportation projects in Ghana. The first transaction, a 55 million euro financing package, relates to the construction of 2 new trauma hospitals, a new accident and emergency center, and the rehabilitation of an outdated health center. The second transaction, 148 million euros financing package, will fund the reconstruction of 2 major transportation routes. Since 2011, Deutsche Bank has arranged over 3 billion euro financing across over 20 transactions to support critical infrastructure development in Ghana. most of which are social loans supported by export credit agencies. Well, that's all we can take on the program today. Thank you so much for watching. I'm Ini John Mekwa.